Hi everyone, welcome back to The Technical View. This is where we look at the world markets from a technical analysis point of view. If you believe that price discounts everything and that everything that the market knows is already discounted into the price, then this is a really cool way to look at the markets or get another point of view on where things might be heading. Let's start down under Australia. This is the All Ordinaries. This is the market that I personally trade. And over the last couple of weeks, we've been looking at a few things. First of all, there's the big head and shoulders pattern. Obviously, this is a bearish pattern, and we're just still looking for that one to play out and break. What it did over the last couple of weeks is actually break below that neckline, and now it's just bouncing back. The exact same thing happened in 2008, and that was the parallel that we were talking about last week. Let me just show you exactly where that was. Back down here. So as you can see, this is what we were talking about last week, where it broke below that neckline, exactly as it has currently, and it's shot back up. They call that a short squeeze. In other words, we get a little bit of strength, and then all of a sudden the short sellers have to sell all their positions, and the people who are bullish on the market start buying as well, and so that causes a bit of an upward move for a little bit of time. Now, in 2008, what we saw was that found resistance at that trend line again, and that's basically where we're sitting today. So this is kind of the moment of truth. We saw the same thing in December. Now, in December, as I was saying, we had that movement up, but we did not have a zigzag up, which is what I was looking for personally. And I'll be looking for the same thing again. So we've got a bit of resistance, quite heavy resistance. It's been proven in the past at 5,200, even stronger at 5,400. However, it is moving up in a potential short squeeze. If we're looking for a more solid move, I'd be looking for a zigzag up or even a bit of consolidation around this level, and then for it to move upwards from there, if that was going to be a move upwards that I would believe in. In the meantime, we're still looking at that sideways to down movement in the All Ordinaries. And just keep in mind, in 2008, that is where the market did find resistance at that longer term trend line. So that is the level to watch. Let's jump over to the S&P 500 in America. Slightly different story. We have a very similar pattern. It's the head and shoulders, so the shoulder on the left, head on the top, right hand shoulder on the right hand side here. Now, this is the neckline that I've drawn in, and prices tend to consolidate around trend lines, and that's exactly what is happening. One thing over the last week that has happened is what they call a double bottom pattern, where the price finds support at two levels and then prices move up from there. So that has currently happened. Again, what I would be looking for personally is a few things. It has crossed above its short-term trend line, but what I'd be looking for is that zigzag pattern up. So we've got the little down bar. If it was to close back above that 1940 level, then that would be a short-term upward move, and it would be proven wrong if it closed back below that neckline at about 1880. And again, keep in mind that there is that resistance level, and that resistance level is about 2020, and that's that trend line. Can the markets move up from here? They absolutely can. The markets can do anything. This period here it's much higher volatility than usual. What you'll find is volatility tends to increase at market tops, and it tends to decrease during nice solid trends. I mean, look at that. This is just the preceding move. Beautiful, smooth, upward movement, and as we move into this last couple of years, we see big volatility, larger swings. The market is uncertain, and it's really not until it becomes certain again that the market will start to move upwards. So what you'd be looking for is for a more solid base to form. Now, I'll show you what that looks like as well, because the exact same thing happened in 2011. As you can see, higher volatility, a big fall in August 2011, and then this is the pattern that we were looking for. As you can see, volatility decreases, and then it breaks out to the upside again in that low volatility move, a nice smooth move upwards, and that basically began the bull market of the last 3 years from 2012 to 2015. So if we were to see a serious up move from here, I would be looking for exactly the same thing. And potentially, you might find that it hits that resistance if it does continue up in a zigzag move, like in a stronger, shorter term up move from that double bottom, then if you were to see the same thing happen as in 2011, you might find that consolidation and that lower volatility pattern start to happen around this this resistance and all of these lines of resistance that we've got in this big choppy top move here. Let's quickly look at Shanghai, the Shanghai Composite in China. Now, last week we were talking about that the market had found support at the neckline, and as you can see, it's been going for a little while. There it is. 1, 2, 3, 4 points of support there now. What I was saying is that it did look like a continuation pattern. Now, continuation patterns can go, like they can start small, like this one here, and then turn into larger continuation patterns as it did. So it started out over a month, went over to 3 to 4 months, and then finally broke out to the downside. So what we've got currently on the Shanghai Composite, it's found support at that trend line. That's happy days. It has closed above its really short-term trend line, and it has made a really short-term zigzag up as well. So for a very short-term basis, the Shanghai Composite is bullish. However, keep in mind that we do have that resistance still at 3,100, and that is the trend line resistance that's formed just over the last year. Of course, if it was to close back below that 2,700 level, then that would be, that would be the end of that upward move, and that would be potential more falls from there. And all we're looking at is points of support and resistance in the future, and those points of support and resistance are clearly 2,700 and around 3,100, 3,200 for resistance on the Shanghai Composite. Let's quickly look at the FTSE 100 in Europe, and what we've got, again, really similar pattern. We had that head and shoulders pattern, left shoulder, head, and right shoulder here, broke out to the downside, and again we're finding that short squeeze, which is pushing the prices up. Now, you'll find a lot of people saying that, you get the sharpest up moves in a bear market. Dan Zanger is currently saying this as well. Gary Stone in Australia has done some excellent research where he's found the strongest up days are actually right next to the strongest down days. So, these things, this is where the volatility increases, and if you're out for both of those days, that actually increases your returns rather than having to be in for both of those days as well. In other words, we've got a lot of volatility here. We still have the resistance at around 6,100, 6,200. But just like the other markets around the world, it is setting up for that really short-term zigzag. It has made the zig, now it just has to make the zag, and you'll find that there is still that resistance there before it can really solidly move upwards. Last but not least is the National Stock Exchange in India. Now, many thanks to Suyash, who at my YouTube channel, who called out that that the NSEI is much better to look at than the Bombay Stock Exchange, just because of a larger liquidity and that sort of thing. So the patterns are very similar. So what I'll do is I'll stick with this from now on. The National Stock Exchange in India, basically the same channel pattern, and it did try to break out to the downside, and it's only just held that lower channel pattern, which is really great. While there is strength in these two bars, so they both have long tails, so we've got a long tail there and a long tail there and a high close, that is a very short-term strength. We've still got that short-term resistance here, and again I'd be looking for it to close above that with a little zigzag pattern, potentially like that. Obviously, keep in mind there's that resistance at 7,600 and 7,900 on the Nifty. And of course, if we were going to see a longer term or more sustained upwards move, then you'd need it to have that solid base, like we saw on the S&P 500, that solid base where volatility does decrease, and the volatility settles down and it moves into that lower volatility pattern before breaking out to the upside above all of this resistance. So that is the world from a technical analysis point of view. Very simple, just lines on a chart, support and resistance, and a few chart patterns to boot. A really cool way to get another point of view on the markets. Have a great week, guys. Happy trending until we meet again, and bye for now.